Hi, thank you for joining us for our live webinar on how to use smart money as investment compass. This is Eric Lee. I'm a sales director with Philip Nova. If you can hear me loud and clear, please help to type a yes in the chat or question box. Also, during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. Right, thank you for joining us for our live webinar on how to use smart money as the investment compass. This is Harry Lee. I am sales director with Philip Nova. If you can hear me loud and clear, please type yes into the chat box. Also, during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. All right, I hope that you can hear me loud and clear because there's no other feedback. So if you got any questions or you face any technical issue, please help to type onto the chat box. This is a disclaimer. Just take note that the information you see, some charts you see here is for education purpose only. So a quick introduction about myself. I joined Philip in 2004. It's currently a sales director with Philip Nova. I have more than 20 years of experience investing in stocks, futures, forex market. So typically, apart from servicing my clients in terms of administrative investment related purpose, I have also spent a lot of my time studying the market, researching on ways to analyze and have a better information, better decision making analysis, and then generally I'll share those through my services and through my conversation with my clients. So this is this presentation scope for today. Just take note that you'll be roughly going by this sequence. So towards the end, if you have any questions, you can, in between you have any questions, you can feel free to type into the question box. I will generally be answering them towards the end during the Q&A session. Okay, let's start with the session proper. So typically when it comes to stock investing, there are a couple of stock analysis methodologies that most people would embark to use in. So this famous quote by Benjamin Graham, right, it says, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. I think this quote sort of summarizes the analysis method that is generally used to analyze the stock market to decide on when to buy and when to sell, or what stock to buy, what stock to sell in current market. So there's two school of thoughts that people generally embark in is the technical analysis and the fundamental analysis. So technical analysis is like what Benjamin Graham said, is based on decision based on it as a voting machine. Now, when it comes to the voting machine, a lot of people cast votes based on emotions, right? Especially during election time. This year is the US presidential election. Coming towards the year end, you will be probably receiving a lot of news, seeing a lot of news updates via social media, via news outlet, via newspaper, and especially for the candidates, especially in the US, right? They will like start to try to hype up their ground, hype up the supporters, so that as to gain more supports, right? To cause them to vote in their favor. So when it comes to trading stocks, right, using technical analysis, it is very much also trying to understand the mood of the market, trying to understand the emotion of the market. So, and typically the emotion will drive the market, drive the price to go up or to go down, right? The emotion will cause there to be a higher demand for a particular stock, or cause there to be a higher supply of a particular stock. And just like what we learned in Economics 101, right, the demand and the supply of certain goods will determine the actual price that people pay for it. If there's more demand for particular goods than the supply, right, the price will goes up. So in the short run, when it comes to stock investing or stock trading, it is very much so, right? If the traders believe that the share price is going to go up much higher, right, in the near future, then the demand for it will drive it up. Even though the price is higher, right, people will buy. People will be willing to buy the share, right, because they believe that the share price will go higher in the near future. So thus, there's supply and demand dynamics will cause the share price to go up or to come down, right? If the demand is low or the supply is high. Supply is high when people believe that the share price is going to go down further, right? So there'll be more seller than buyer, thus driving down the share price. So, and it's very much sometimes driven by emotions, right? By greed, by fear, by rumor, and a lot of times the price may move, right, without any particular news, right, and more because of what news or what rumor is being spun around in the market on the particular stock. On the other hand, as what Benjamin Graham has said, right, the stock investing is also like a weighing machine, right? So as a weighing machine, you will weigh the value. You will weigh the value of the stock. You will weigh the value of the company. And this is actually what Benjamin Graham focused in, right, on the weighing of the stock, weighing of the value of the stock, weighing of the value of the company. And of course, his most famous student that we all know of is Mr. Warren Buffett, who very famously ran the Berkshire Hathaway company and then grew his wealth, right, from almost nothing to become one of the richest men in the world, right? So, and he does that through a lot of fundamental analysis methods, right, like asset-based valuation. And when we do that, we are actually studying and valuing the assets and the liabilities of a particular company. If a company has more assets than liabilities, then the company is worth a certain value. And if the market price the share price such that the share price is lower than the value of these assets, then investor may deem this particular company or this particular stock as being a valuable company, and then they may decide to invest in it. There are of course, other ways of fundamental analysis, like studying the income statement, studying the trend of the revenue, the trend of the earnings. So if a company continues to earn more and more income year after year, then that company will be valuable so long as the share price is traded at a reasonable level. And lastly, also, people will study the discounted cash flow analysis, which is study the actual cash. Because after a while, investors, or rather the investment community, realize that some companies may beautify their earnings, beautify their income statement through some fanciful accounting methods, right? But cash is the most accurate, right? If you have the cash in your bank, then it means that this company is able to generate positive cash flow. So when it comes to weighing the value of the company, we want company with positive cash flow, and also the cash flow to be increasing year after year. So basically, this is how the two schools of thoughts generally the people in the investment market now are using to invest or decide on when to buy and when to sell. There's not exactly right way, right? Whichever way that works for you, right? That will be the right way, right? If you find that technical analysis works better for you, then you can use more on the technical analysis. Basically, for myself, and or rather, my advice to my clients is generally use both, right? Don't limit yourself to be just a chartist. Don't limit yourself to be just analysts that study the accounting, studying the income statement and such, and balance sheet and such. Use whatever tools is available, right, to help you to give you an edge, right? Therefore, then you can find yourself being a much more improved or better investor, right? But having said that, using all these tools, there are some traps and pitfalls, right? Whether we use technical or we use fundamental analysis. Take, for example, fundamental analysis, where when we do fundamental analysis, we are basically looking at the quantitative factors. You are looking at the numbers. And by doing that, sometimes the investor may overlook the qualitative factors. By qualitative factors, we are referring to the management, right? Who the founder is, what is his vision for the company, what drives, what passion that the management may have, right? And what are the company's culture. So this does also have a deciding factor in how the company may perform in the long run. And also by sometimes looking at just the income statement, we may be ignoring macro trends. What is happening in the world right now? What are the geopolitical issues that may influence the businesses, right, in the short run or in the long run? Or by doing the fundamental analysis, we are also relying too much on historical data, because whether we study the chart, the price chart, or we study the income statement, or the study the balance sheets, we're actually looking at the data that is in history, right? That is past. We are looking at last year's income. We are looking at last year's assets. How about next year's asset, right? That would be of some value, right, to an investor, because when we invest, we are actually investing for the future, right? That we will gain our investment outcome will actually come only in the future. So sometimes it may be also incomplete information and also misinterpretation of the valuation metrics, right? So you may have done all the homework, we may have like studied all the income statement and come up with valuation metrics, but yet the share price may still continue to trend lower because maybe somewhere down the road while doing all this analysis, some mistake or some wrong assumption have been made, thereby causing a wrong decision to be made on the investment as well. How about technical analysis? Technical analysis sometimes is okay, we overemphasize too much on the short-term trends, right? Because most of the time, like even though some people may use the charts to study the long term, but typically most people will be using it on a short-term basis. And even for some traders that I know of that started off wanting to use the charts analysis to invest in the stock for the long term, but because the price, the data has been like coming in on a daily basis, or in some cases when you look at it on an hourly basis, or in a minute by minute basis, that actually causes the investor or traders, right, sentiment to change. That they may have then subsequently ended up um, um, diverting from the original plan of investing in the stock for long term. And many common mistake for technical analysis is false signals, right? There are many false signals, right? Technical analysis will never be 100%. As a matter of fact, so for fundamental analysis as well, right? You may have false signals, they may cause you to make the wrong decision. And it is also a lagging indicators. No matter what indicators that we use, most of them are lagging, right? Because you need first to get the data, which is the prices, the open, high, low, close, and then through some mathematical formula, right? They may string a set of data before churning out with a actual indication to buy or to sell. And by waiting for all this string of data, right, by itself, the analysis you get is already lagging. Or you may have conflicting signals, especially for technical analysis. There are hundreds and hundreds of indicators out there. And sometimes, even for one indicator itself, you may have many parameters, right? I've once seen traders chart, full of lines, full of arrows, and it's just pointing everywhere, right? It can be pointing up or it can be pointing out down, depending on which particular lines you want to focus on. So thereby, right, by looking at charts like this that's highly vandalized, right, it may give your traders, especially new traders, right, very conflicting signals that people will sometimes end up being comatose, do not know what to do, don't know whether to buy or whether to sell. Right? Technical analysis, especially when it comes to penny stocks, comes to those stocks that is very illiquid, is very much prone to market manipulation, right? Especially for penny stocks and those that is very illiquid, right? A particular or group or single trader who is with large enough capital may be able to trade the stock in certain way such that it may cause the other traders to have a false assumption that the price may go up when in fact they will end up selling the stocks on a later stage to press the share price lower. And also lastly, psychological biases. Sometimes traders may already form some bias, right, such that they will only pay attention to certain sets of technical analysis or even fundamental analysis and ignoring other set of data, right, because they already have a bias that the stock should perform in certain way. So what is the solution then, right? That's what I want to introduce to you today by using smart money analysis. Because like I say, I've been trading and investing for over 20 years. So when it comes to different analysis method, different many books I've read, courses that I've attended, strategies that I've developed, and there is no one single methods with a perfect solution. In fact, sometimes the reason why I developed this smart money analysis is because I realized that even though there are times that I may have done all the homework necessary and then discover a stock with a very attractive valuation, with a price chart that looks that it's about to break out, and yet sometimes the stock did not move right in the right direction that I have deduced based on my analysis. Right. Therefore, I decided to dig a little deeper to find what is the reason or what is the solution that I can use to help me overcome this and also to help my clients overcome this. Right. So what is then smart money analysis? Smart money analysis is basically studying the flow of funds in the market, right? Like I say, based on technical analysis, right? If there are more buyers than sellers, the share price will go up. So therefore, smart money analysis is really on the lookout for the smart money in the market. Those that people with the deep pockets who knows what they are doing, right? Who are not buying blind, who are not buying based on rumors or based on feelings, but based on their own independent analysis on news flow, right? So what I want to do is that to piggyback on this smart money by buying the stock in the direction that they are trading in, right? If they are buying up, that's what the stock that I'm interested in. So take for example this Sembcorp, right? From August 2020, Sembcorp's market cap was at 1.5 billion. Right at that time, it's trading probably around I think 70 or 60 cents. right? Then fast forward to January 2024, okay, as of what this chart is. But even if you look at the price of Sembcorp as of today, is trading at $5.40, right? So that's almost 6 times move over 3.5 to 4 years. So from a market cap of 1.5 billion, Sembcorp has then moved up to a market cap of 10 billion as of today, right? So how did Sembcorp move up so much? And what is this blue line here that I've drawn? This blue line is the smart money, right? The people who are investing, whose profession is investing as a profession, right? And they are buying Sembcorp. So who are these smart money? The smart money is basically referring to the institutional fund, hedge fund, foreign investors, or it could be our very own those sovereign wealth fund, right? Temasek or GIC and such. We do not actually know who they are, who this smart money is, right? But as a group, we know that they are investing as a professional. So the good thing about following the smart money is that you know that these are the group of people who are not investing, who are not basing their decision based on guesswork, who are not doing it based on rumors, based on hearsay, but actual investment analysis has been done. It could be technical analysis, it could be fundamental analysis. But as a group, right, the smart money had decided that Sembcorp is worth investing, and collectively they had then invested and bought the stock from a 1.5 billion market cap to a 10 billion market cap right now. And what is smart money flow? Basically, smart money do not just focus on Singapore market alone, right? Especially for the international funds, right? They will move their fund to the path of least resistance, but which means that whichever opportunities that avails to them, allowing them to grow their fund uh, further or higher. Or sometimes maybe it's not just simply just to grow their fund, but also to safeguard, right? So that they do not invest in something that is a super high risk that ended up they will have to lose a lot more or not able to retrieve their funds whenever they want to. Of course, that doesn't mean that smart money do not lose money, right? It just means that they have more tools, they have more expertise at their disposal, right, before they make the decision. And sometimes they feed on each other, right? When one smart money or one particular fund done the homework invested in a particular stock or a particular sector, they might draw the attention of other professionals or other funds to pay attention to the particular stock, because whenever they invest, whenever they move their fund, they will leave tracks around, right? They are not just moving hundreds and thousands of dollars, they are moving millions and sometimes billions of dollars, and that will leave tracks. So people who are paying attention to the money trail will then be able to pick up clues what these people are investing in, and also piggyback on them or to double up their homework on the particular stock. So what are the driving force behind smart money trends, right? It could be fiscal policies or monetary policies, especially the last 2 years, whereby we have the high inflation going on around the world. So governments or central banks set policies like increasing interest rate, like or it could be like increasing investment in a particular sector. So all these economic forces, right, may then cause the smart money to choose to invest in certain sectors or to avoid certain sectors for that sense. So especially like take for example last in 2022, 2023, whereby the Fed was increasing the interest rate. So increasing interest rate is beneficial to the banks, but not very beneficial to the REIT sectors. Therefore, we notice that the smart money has been really selling the REIT sector, and a little bit of buying in the bank sector until probably about sometime last year. Or geopolitical forces, right? We have the Russian-Ukraine war, you have the Israel Hamas war going on, and we also have the US-China trade wars going on, and trolling in the conflicts with that involves Taiwan, that involves Japan and Korea as well. So all these geopolitical forces may cause the smart money to shift their investment around. Sometimes it's not really because there's better opportunities. Sometimes it's just to avoid the risk involved in that particular sector or particular region, right? So and by them moving the funds, even though they are moving out, and usually when they move out, they do not just sit in cash. They will move into some other instruments, some other assets, or some other stocks, right? So the other stocks or the other assets may then benefit, not because they are better, but because they are less riskier. Or it could be technological trend. A couple of years ago it is the renewable energy, and then there is the we have the EV revolution. We saw the stock of Tesla running up to become a $1 trillion company. But of course now Tesla is not the focus. The focus is in AI. Focus is in NVIDIA, stock like NVIDIA. And soon there will be some other technological breakthrough where they will cause the investors or cause the smart money to shift their focus in, right? So that may also be a reason. And a lot of times it could just be pure valuation. That particular stock is after company analysis has been done, is being deemed to be valuable. Is being deemed to be trading below the intrinsic value, right? So thereby, by that itself, it will cause the smart money to shift their focus to invest in that particular stock or in that particular sector, right? So how then do we use these tools? How then do we use this information of what the smart money is doing to help us as an ordinary investor to choose the stocks and to choose the sectors to invest in? Take for example, this is a smart money analysis on the utility sectors in the Singapore market. And you can see that from October 2021, the blue, okay, in all the charts that you see here regarding smart money, so I forgot to mention, whenever you see the blue line represents the funds that the smart money had been putting into the particular sector or stock that this chart is showing. For example, this is the utility sector. So as the blue line climbs up, it means that during this period of time, the smart money is buying into this sector. As the blue line comes down, it means that during this period of time, from September 2022 to about December 2022, for a period of 3 months, the smart money had been selling. Right, so the selling doesn't mean that they had turned bearish. That's why whenever we do such analysis, we also have to look at the slope or the magnitude of the selling. Right, if the selling is not as much, the anger or the value is not as much as the buying up, then in general we can still view that the smart money is still bullish. But in the meantime, probably they may feel that the stock is moving nowhere for the next quarter, for the next few months. So they will rather put their money into somewhere else or some other sectors that is moving, right? So it could be just a rotation happening, as is what we are seeing here, right? Rotation happening for the utility sectors. So then come January 2023 onwards, smart money then pour back into the sector, and the price of this sector then start going up. So the gray line shows the price of the asset, the price of the stock, the price of the index, and the blue line shows the buying and selling actions of the smart money. So in general, we can see that there's a strong correlation between the smart money movement and the price of the stock or the price of the index. Okay, this is the other example. This is the REIT sector of the Singapore market. So since 2021, the Singapore REIT sector has been coming down up to now, right? Typically, most of the REITs has been coming down. Of course, when we study, when we use this to study the sector itself, you got to know that there may be a couple of stocks in that sector that could be the outlier. Even though the rest of the sectors going down, that particular stock or REITs may be going up, right? So that's another self-analysis. But in general, we want to avoid investing in a sector that has an overwhelmingly bearish trend when it comes to the smart money investment, right? So if the smart money has been selling, then the blue line will be coming down. And a lot of times also we can mix up the smart money investing together with market trends, together with news flow that you or some ideas that you may have. Take for example, back in late 2023, right? So the US market actually had a spike up move, being led by the Magnificent Seven. The Magnificent Seven are typically the largest IT or tech firm, right, in the US, like the likes of Microsoft, Nvidia, Tesla, Google, Apple, and such, right? So as an investor in Singapore, of course, we can always follow through and invest in the US stocks. But what if I also want to look out for Singapore stocks to invest in that may have a positive feedback from the movement that is happening in the West, right? So Nasdaq had moved up from 14,000 to close to 18,000. So what about Singapore stocks? What other stocks can we look out for? Right, they do a couple of technology stocks in Singapore. Like they may not be of the same level as especially the likes of the Magnificent Seven, but some of them do provide good trading or investing opportunity as well. So take for example this Venture, right? This is a smart money chart on Venture Corp. Right, Venture Corp is one of the 30 STI stocks, one of blue chip, and the only technology, the only STI stock that is in the tech sector. So since early 2023, right, Venture hasn't been doing so well. As the blue line has shown, the smart money had been selling, and the price of Venture, right, it's been falling down as well. Then somewhere in early November last year, right, smart money turned from seller to buyer, and they've been buying Venture since. Even up to recently, this chart is as of February, but as of recent, they do the last couple of weeks they do some selling from the smart money when it comes to Venture, but nothing of magnitude that to cause us to think that there's a change in trend or there's a change in attitude towards Venture. So typically, so from early November until now, Venture has moved up close to $1.50 to $2, right? And we can see that just by following the smart money to buy when they have turned buyer, and the confirmation did not come. We are not trying to bottom pick, right? We're not trying to pick right at the bottom and guess when the smart money will start buying. What is beautiful about this analysis is that we can wait for smart money to actually buy, and we have a more confirmation before we go in, right, and join to buy this particular stock. Of course, we will not be buying right at the bottom, right? The price may have moved somewhat, but typically when smart money buys in a sector or buys in a stock, most of the time they do not just do so right in the short term on a short term basis, just buy up for 1-2 weeks. But of course, that may happen due to some rebalancing, right? Taking of small profit and such, right? But if we wait for a trend confirmation to appear, right, it will still not be too late, right, to buy in, because most of the time, right, when the decision has been made to invest in the stock, right, they will typically continue for over the next few months. This is another tech stock, Franken, right? So similarly, actually the signal comes much earlier in mid-August last year, and personally, when I noticed this, right, it was somewhere in November last year. And what attracted me to the stock as well is because I see that, like, from August to November, smart money had been buying, right? As can be represented by the blue line that is constantly climbing up over the 3 months period. But you can see that the price itself is just moving sideways, going nowhere. In fact, this is also a very ideal opportunity for investors like you and I, because this is a period of time whereby they are consolidating, right? Share price is not going up, right? But they are buying, so they are accumulating. The share price is consolidating, thereby offering us an opportunity to buy it at a much lower price than if the share price was to continue the buying action of the smart money upwards, right? So sometimes when it comes to smart money analysis, this is also what we want to look out for, a divergence, right? Whereby smart money is buying, but the price is not going up, or the price, in fact, sometimes may come down, right? So such divergence may offer us an opportunity and wait for the breakout in price to happen. Most of the time, the price will follow the smart money upwards. Occasionally, of course, I do see that sometimes the smart money may try to move up the share price, but the share price did not follow suit. And after a while, they may probably decide or change their mind, and then they start selling to match the direction of the share price, right? But that is not very often, right? It could happen, especially to penny and more illiquid stocks. Okay, how about government policies, right? So Singapore government has this SG Green Plan, whereby the plan is basically because of climate change, we want to change to a more sustainable energy, to be more energy efficient, to be a more sustainable, right, society. And the Singapore government is committed to achieve this net zero emission by 2050, right? Meaning that for all the power, all the energy that we generate, that we use, we actually do not add in more carbon, right, into the, I mean, we do not contribute those carbon emission to the earth, right? So this is a target, and of course, they don't just set target and don't do anything, right? So from the government sector to the private sectors, right? Changes got to be made, investment got to be made, so that this result can be achieved. And of course, when we go for this, when the Singapore government go for such kind of a change, we do not want to end up, right, damaging the economy such that, yes, we achieve net zero, but yet the economy is in shambles. We are not able to sustain this, right? So it has to be in such a way whereby the economy can continue to grow, and yet we can still continue to contribute as responsible citizen of the world, right? So and we see that being this change in government policy having a positive impact in the utility sectors, right? That is why for the last 2 years, the utility sectors has been going up, right? And especially for Sembcorp itself, Sembcorp is one of the largest utility stock that in Singapore, and also in the Straits Times Index. And how about geopolitical landscape? Like about October last year, right? We heard of we wake up with the news of this attack on the Israel by Hamas, and then subsequently, of course, this conflict exploded and has been ongoing until now. And being in that part of the world, right, it will definitely have some impact on the global oil and gas market, right? So so as an investor, if you think that, yeah, based on this this impact, there may be investment opportunities in the energy sector, right? You then may, before you proceed, right, to do the buying and selling of the particular stocks in the energy sector, you can also proceed to just check out what the smart money are doing on some of these energy stocks. Right, in Singapore, we do not have any blue chips energy stock, but we do have some small and medium cap size energy stock. So Dynamic is one of it. So as you can see, from the blue line, right, since July 23, the smart money have been selling, and the price of Dynamic has been falling from close to 43 cents. It fell to below 20 cents at the low. So it fell to about 23 cents. So it's a drop of 20 cents, almost 50% drop, right, in a span of 6 months. So that's just how volatile penny stock can be. But that could also mean opportunities, right, for traders and for investors, right, to also be able to capture a significant move. So somewhere in February, we then noticed that smart money changed from selling to buying. And what happened for the share price is that from February onwards, the share price was trading close to 30 cents, and it has been moving up to currently about close to 40 cents. So it's a 10-cent move in the span of 2 months. So a 10-cent move for a 30-cent stock is about 33% move in a 2 months period, right? And we are not, of course, we should do more analysis, like checking out their technical analysis and fundamental analysis. But by just looking at what the smart money is doing, it gives us an idea, right? So I do not propose, of course, to just blindly follow them, right? It is still good to do our own homework, right? But this can be added on as a supplementary support, right? Because many a times, as I mentioned, the smart money, they are the professional investors. They don't just put their money or invest in a particular stock or sector just because they wake up, read the news someday, right? A lot of times, more in-depth analysis has been made. And for the matter of fact, right, the tools they use probably much more allow them to do a much more in-depth analysis, allow them to be able to have a much more accurate news flow or faster news flow than the rest of us, retail investors, right? So, but not all energy sectors will perform equally well, right? Some may perform better, some may in fact not perform at all, even though they are in the same sector. So geoenergy is another stock, penny stock, based in Indonesia. Right? It's not exactly doing anything in crude oil related. It's actually doing coal mining. So, but coal is a substitute of crude oil or of natural gas. So, if the price of crude oil or natural gas is high, right? So, in certain economies or certain countries may have no choice but to fall back into using more coal to supplement their energy supply. Yeah. So from December last year onwards, we see that the smart money have been buying, right? So then the price of geoenergy shot up from below 30 cents to at a high close to 45 cents. Of course, it has since corrected downward to back to 30 cents. But interestingly, if you notice here, the smart money did not really exit from this stock, right? The price has gone down, but when they bought it up, they have only sold down a little bit. So, and this is a divergence that will cause me to take notice and pay attention to this stock, right? So it probably warrants more analysis, or it could be just allow me to put it into my watch list and keep a tight watch on it, waiting for the next move to come, right? So most of the time, the price will follow the direction of the smart money. Of course, occasionally, the smart money may end up not so smart, so they may then later on realize that, hey, actually the stock probably not doing as well as we intended, and then they start selling down. So that could have happened, right? So that's why it's always a plus that we add on other supplementary support, particularly any reason that we think that may cause the price to go up. Okay, so lastly, I want to touch on something that is not from Singapore. In fact, YTL Power is listed in Bursa market in Malaysia. So and it also represented opportunity when it comes to technological trend. Right, YTL basically they are a utility company, something like Sembcorp Industry. But and in fact, most of their business, is from Singapore. About 70% of their business is from Singapore. They actually own this Power Seraya. So about 20% of the business is from the UK. So one of the reasons why, in fact, if you have been paying attention to the Malaysian market, the YTL and YTL Power both did tremendously well last year. They grew about 4 times, right, in the year of 2023, right? And even up to now, the share price still remain relatively strong, and we have seen that the smart money is still buying this particular stock. So of course there are a couple of reasons why that caused YTL Power to do well last year. Firstly, it was being added into the KLCI, the Kuala Lumpur Composite Index component stock, late last year. So usually when a stock is being added into a component stock, that may cause foreign investors or funds that tracks the Malaysian market to need to readjust and to own the particular stock that they did not used to own because it was previously not in the index. But now, since November last year, they have been indexed. And another thing that positively caused them to go up is the exchange rate. Yeah, like I say, they earn 70% of their business from Singapore, so they earn income in Singapore dollars. But the stock is traded in Malaysia in Bursa market in Malaysian dollars. So whatever money that they earn, right, will be reported, right, back in Malaysian ringgit, right? And then you can see that when there's a huge currency movement, as what we have been witnessing almost every other week, we hear the news of the ringgit falling all-time low against Sing dollars. So this does also has a somewhat positive impact onto the performance on the YTL Power itself. And then, but they are not just, and the the next piece of news is what I'm actually quite interested in, is that YTL Power actually work together with NVIDIA, right, to offer AI cloud supercomputing. I think it's something like a data center they're offering to businesses, and this data center is able to embark on the AI technology to improve in the efficiencies or productivities of the companies. So this particular business piece of business is not big, right? A small percentage of what YTL Power is earning from its utility business. But it shows that the company is not staying put, right? The company is not just trying to hold on to what it already has, right? It's trying to expand. It's trying to also tap into the opportunity of this technological trend. But whether they succeed or not, we don't know. But that do add excitement, right? Whenever companies do something like that, it add excitement. People pay attention. Investors pay attention. But like I say, right? So it is investing is also like a voting machine. When there are more demand for the stock, even though the share price is high, but because there are more demand for it, the share price may still continue going higher, right? And if you look at fundamental side of the company, it is sorry, I forgot to show the slide. So this one is about the ringgit. So this one is about them earning about 74% of the business of Singapore. So the smart money has been buying this YTL Power since the start of this year, and even as of now. And what's good about this is that actually even after a fantastic move last year, the share price of YTL Power had actually been sideways consolidating. So even though the smart money had been buying, the share price is actually moving sideways within a range of $3.70 to $4. That actually does open up opportunities for investor to follow in, right? So if we on the flip side, if we see such consolidation but smart money selling, then these are the stocks that we want to avoid. But as of now, the YTL Power do still look interesting, and then as long as the smart money is buying and the story continue to stay intact, the share price will have a good opportunity to trend higher. So as I mentioned, YTL Power's fundamental is not bad as well, right? It's not just moving up just based on rumors or based on this hype on AI. They are also growing their business. As shown here, the revenue has been climbing up. The margin has been expanding. But whenever investing, we always like to invest in company that has an expanding margin. That means that out of every dollar that they earn, they get to keep more right into the pocket, or they get to distribute more to the shareholders in dividends or in terms of share buyback. Right, and the technical analysis of YTL Power is looking good as well. As I mentioned, if you just look at TA itself, technical analysis on the chart itself, it has been consolidating since the start of this year in February in a sideways, so almost in a flat or in a channel formation. Then sometime in early April, there was a breakout. It pulled back to the formation, and then the breakout continued. So for chartists, these 2 points that I drawn here on the arrows are actually a good opportunities to invest, to add on to the stock just based on chart alone, right? But we do not just need to rely on chart, right? So we can also rely on the fundamental analysis, which shows that the company is growing, and more than that, we see that the smart money are interested. The investors, the professional investors are interested, and they are buying, and that is an even more powerful tool to me, because it is based on real money, right? Real money being invested, being put into the stock itself, right? That somewhere out there, some institutional investor or fund managers believe in the stock so much that they are putting up percentage of their fund. Whenever we buy into a stock, we are always opening up to certain risk, right? So, but you will have to believe in the stock or trust in the analysis so much so that to be able to willing to take the risk, whichever amount that you put into a stock. And so the smart money analysis is powerful in that sense, right? Because we can see the real money pouring in or out of the stock just by tracking the blue line, right? So I hope I come to almost a close of today's session. I hope that you have learned something useful and you find that this smart money analysis something interesting. So and we do have some promotion going on, right? If you think that this tool is useful and then you would like to be able to use it to help you to invest in the Singapore or the Malaysia markets, then you can consider opening an account with us. And also that for these 2 months, we have a promotion going on. So if you are the first 50 to open an account, put in $500 and place one trade within the month, then you get to receive $100 trading credits into your account. So for example, for the month of May, from between 1st of May to 30th of May, if you are the first 50, meaning that on the you open an account, you fund in 500, and then you place one trade in any products, stocks, ETF, CFD, Forex, or futures. Just place one trade in any products, and you will then get to receive $100 trading credits. So please take note that you will need to do all these 3 actions: open account, fund the account, and place one trade, right? To be considered and be one of the first 50 to do so, to be able to win this $100 trading credit. So this is something that it helps, right? To helps you in terms of financially benefits, right, from these $100 credits. But beyond just the financial benefits, right, as I mentioned, part of my service to my clients, right, for those who open an account with me, is to provide them with the tools, the analysis tools that I have been using in my own investing journey. So for this promotion as well, apart from just the $100 trading credits, if you open an account with me today, right, you will for the next 12 months, you'll be receiving the Smart Money report, the weekly report, right? So the next 12 months you'll be receiving this for free, right? Even if you, after placing the first trade, you get your $100 credit, you do no trade at all. For the next 12 months, on every week, you will receive this Smart Money report. Okay, maybe the last 2 weeks of December, usually I will not send out, because usually at that time, the fund managers are off for holiday. There aren't much data to harvest. So usually no data, then I will not be able to send out the reports. But for the other 50 weeks of the year, you'll be receiving this report free of charge for the next 12 months. Okay, but what if after the next 12 months, if you think that you like it, you like this report, you want to continue to receive this report, then what if you were to do your trading, right, in this account that you open, right, and you incur $500 commission fees during the 12 months period, then you will continue to receive this report for free the following 12 months. So thereby, on and off, every 12 months going forward, if you continue to trade using this account, you will continue to receive this report for free, as in if you continue to incur $500 commissions fee every 12 months. So $500 is not a lot. So if you divide by 12, it's about $40 per month. Yep. So okay, but I mentioned, so I've shown here on the slide that this report that you'll receive for free is the STI version. So then I do have a full version which I offer to my clients who open an advisory account or a managed account with me with at least a 50K AUM. So for those clients, they will receive a full version. So the difference between the two versions is that the STI version, you have all the 30 STI stocks, and the full versions, beyond just the 30 STI stocks, they will also be receiving the smart money report on other small and mid cap. But as for Bursa stocks, in fact I just started adding them into this report. So both versions will receive. But for Bursa stock for now, I am just sending up a watch list with a list of stocks that I think is worth looking at, paying attention to. So this is also included as a one page in this smart money report that I sent out. Okay, so these are my other services beyond just the weekly smart money report. I also conduct a monthly webinar for my clients. So this will be held on Zoom. So the next session is on the 30th of May. I always hold this seminar on the last Thursday of the month. So between 7:30 p.m. to 9 p.m. So on this webinar, I'll be firstly showing them how to use the smart money report and how to interpret smart money report, and also be sharing some latest move based on the smart money report or based on some other analysis that I've done. Because sometimes if I see that the stock is interesting and I dig a little deeper, I find some other angle that may add on to our decision-making journey. I will also be sharing that on the stock. So that could be via fundamental analysis or technical analysis as well. So and also beyond that, also have clients who would like to, they can subscribe to my WhatsApp services. So these are the list of the WhatsApp services that I do provide for those who open a Nova account with me. Okay, so special gift for those of you who stay until the end of today. So this is the list of Bursa smart money watch list that I had actually just sent out in this week's report. You can see right at the bottom, YTL Power International is one of it. In fact, when I held my last Follow the Smart Money webinar, which was last Thursday, so YTL was traded at $4.12, 4.12. So since then, it made a tremendous big move on Friday and Monday. So almost 20% up. So and it closed on Monday. I closed on Monday at $4.79. Of course, there's some pullback today. So the price is somewhere around $4.50 something or $4.60 today. So yeah, so as of last week, the data shows that smart money is still buying for this stock. So and for the rest as well. So yeah, so this is you may take a picture of this, and if you open an account with me today, you will be receiving this weekly smart money report, to which this watch list will be updated on a weekly basis. Okay, so these are my contact. If you have any questions after today, you want to ask, you can then contact me through email or through WhatsApp. Okay, I'm just going to see if there's any questions. Okay, there's a question from Boon Kam. Can we get the smart money like you in TradingView? No, it's not available in TradingView. So smart money report is actually I generate myself, data mine, and then create it myself on this Excel. Right, it is not available on TradingView and not available in any charting software that I know of. From Mr. Ng, how do you track smart money using volume? Okay, not using volume. Smart money is tracked using actual trading, right? Using actual funds. So usually they will comes in like if they buy, let's say 1 million of the stocks, so then it'll be 1 million, right? So of course, to make it easier for tracking, you'll then be using the decimal, like maybe 1.0 or something like that. Is your coaching session free? Yes, coaching session is free. So if you can't decide right now to open account, you want to ask me more questions, or you want to meet up to understand more, you can then scan the QR code and register for coaching session. Is there a demo account to try out? Is it free? Yes, demo account is free. Demo account for Nova is free. Let me just go to the slide. Yeah. So you can see on the right here, if you want a demo account, you can scan this QR code. If you want to open an account right now to participate to get the $100 trading credit and start receiving the weekly report, you can scan the QR code on the right. From Joseph, what is your returns for your managed account? Okay, managed account is not managed by me, it's managed by our fund managers, a team of fund managers. So they do have a few strategies that they embark on. But let me take this offline. So maybe you, Joseph, you want to send a WhatsApp message to me on that, I can then send you more information on this. Right, because a managed account is actually another product from our sister company, Philip Securities, to which I also am a licensed representative as well. Okay, is there any more questions? If not, okay, from Ray, do cover US stocks and other markets, forex, commodity, crypto? Yes, I do cover US stocks and other markets as well. Just that I do not have smart money data or report on them yet. Currently, smart money report is on Singapore stocks and Malaysian stocks only. Perhaps in future, when I have found more reliable data source, I may then look into including them. Right now, another market I'm working on, researching on is actually Nikkei, Japan market, but not the Japanese stocks, but the Nikkei index. Actually found some pretty reliable data and I'm doing my research now. So once I research that it is something usable, I will then also be including the Nikkei index into the smart money report. So then that will be good because though I do not have the individual Japanese stocks, but anyway, is for most of us it's difficult to analyze Japanese stocks. Right? Most of the information is in Japanese. But if we have the smart money data on the Nikkei index itself, then we can either choose to trade the Nikkei futures, or we can choose to trade the Nikkei ETF. Okay, from Ray again. Okay, sorry, I asked this before. I read this before. So yeah, so other forex commodities, I don't really cover crypto. If you want my point of view, I can share with you. But personally, I do not really recommend investing in crypto. But commodities, forex, yeah. Okay, thank you for your time. That's all we have for today. Thank you so much for being such a wonderful audience for tonight's webinar. A link to the recording of this webinar will be made available in our follow-up email tomorrow. If you have any query on the webinar, or if you would like to get started, simply reply to our email and we will get in touch with you. All right, this is Eric Lee signing off, wishing you great success in your investment journey. Bye.